Hi, I am Morris. Silicon Island Scoop is a channel that exclusively reports on the latest trends and news in Taiwan's technology and electronics sector, including developments related to Taiwanese companies with US-issued ADR. In the process of compiling information, there are often many comments and information about the economy, so I will make a few videos about economics. I hope you will like it. Let's start today's content. The Chinese real estate market has always been an important pillar of the Chinese economy, and also the first choice for many investors. However, in the past 2 years, the Chinese real estate market has shown a clear downward trend, and many developers and landlords have fallen into difficulties, and housing prices have also fallen sharply. Does this mean that the Chinese economy has also entered a low period? Or is it that the Chinese economy is facing a new era of decline? The imbalance of supply and demand in the real estate market. The problem of the Chinese real estate market is fundamentally a problem of imbalance between supply and demand. Excess supply. From the perspective of supply, the supply of the Chinese real estate market is too large, far exceeding the market's capacity. In 2017, the real estate area built by Chinese real estate developers reached 1.7 billion square meters, basically maintaining a geometric magnitude of increasing tenfold every 10 years, and growing at a huge profit. The houses built by Chinese real estate developers that have not been sold for more than a year are 600 million square meters, which are unsaleable. The houses bought by the Chinese people that are not occupied are investment houses, accounting for 20%. China has a total of 40 billion square meters of housing, and the commercial housing built since 1990, which is in the hands of the people, is 30 billion square meters, of which 6 billion are idle. These data all illustrate the degree of oversupply in the Chinese real estate market. Weakened demand. Corresponding to the oversupply is the weakening of demand. China's population has reached the ceiling of 1.4 billion, and there is a phenomenon of negative growth. The population decreased by 2.08 million in 2023, and the fertility rate accelerated. Population decline means that the demand for housing will also decrease. China's urbanization rate has reached 65%, and some provinces have reached 70%, while Europe and the United States are 75%. China's urbanization is to draw out young and middle-aged people from rural areas, and the growth rate will be 5% to 6% at most. The demand for urban housing cannot keep up. China's aging has reached more than 20%, and it will reach more than 30% by 2030, and even 40% to 50% by 2050 and 2060. The more elderly people, the less houses they need, and the more people who die, the more houses they will withdraw. China's current per capita housing is 48 square meters in 2019, and it has risen to 50 square meters by 2020. In the developed countries of the world, Europe and the United States are 40 square meters per capita. 40 years ago, we were 5 square meters per capita, and now we have become 50 square meters. We have reached the ceiling, and even if we want to bubble the demand, we can't bubble it. These factors will affect the structure of housing, and the demand for new houses will drop significantly. The future trend of the real estate market. According to the relationship between supply and demand, the future trend of the Chinese real estate market is not difficult to predict. In the case of oversupply and weak demand, there is no possibility of rising house prices, and there may even be a risk of a sharp drop in house prices. As long as the house is still a marketable commodity, the relationship between supply and demand is the ultimate factor that determines the house price. Houses will be built less and less, because real estate developers need to adapt to the new market environment. After 10 years, the house depreciates and ages, and new houses need to be built. It may be that at this time, the house price will bottom out and start a new round of benign house price recovery, but a slow recovery period. Conclusion and suggestions. The Chinese real estate market has entered a new era of decline. And the other two pillars of the Chinese economy, exports and infrastructure exports, affected by global de-Sinification and industrial chain transfer, it is difficult to have the previous growth. Infrastructure. The excessive investment in the previous 10 years, the marginal benefit has decreased to the point where it cannot be recovered. Exports and infrastructure. There will be opportunities to talk in detail later. The pessimism of exports and infrastructure plus the decline of Chinese real estate. In summary, the Chinese economic outlook is bleak. How should investors choose? Investors should soberly recognize this, not have a fluke mentality, and think that there will be a day when house prices will rebound. On the contrary, investors should turn their attention to foreign mature markets, because foreign markets are more market-oriented and can better judge the big trend. Specific suggestions. Investors can consider investing in foreign assets such as stocks, bonds, real estate, etc. Conclusion. At present, in short, dispel illusions, stay away from China. That's all today's content. Please subscribe to my channel and click the bell icon to get notified of my latest videos. If you like this video, please give it a thumbs up and share it with your friends. Thank you for your support. This will make it easier for YouTube's algorithm to recommend me to more people. Thank you for watching.
Thanks you.